In order to place trades, you have to understand the different order types that will allow you to do so. So in this lesson, I'm going to show you the 4 main order types and the situations you might choose to use them. So if you're ready, let's get started. The market order is an order type that will immediately execute your order at the best current available price as soon as you hit the buy or sell button. So since this is an order type that immediately executes, it's not going to guarantee you any specific price since prices can change rapidly due to market fluctuations. So this order type is mainly used in situations where you don't necessarily care about the price you buy or sell the stock for, but more concerned about entering or exiting a position quickly. Because as soon as you hit the buy or sell button using a market order, your order is going to execute at whatever price is available at that time. For example, let's say that you hear a good news report about a company just about to cure a certain disease and you want to buy the stock immediately before the price goes up. So since time is of the essence, you would use a market order. So to place a market order, make sure that the buy side is selected, which turns the buttons blue. Then you would select market from the order type options, type in the number of shares you want to buy in the shares box, and then click the buy button. As soon as you click this button using a market order, you will be in a position. Same deal as if you're already in a position and you wanted to sell immediately. Maybe you need the cash from a winning position quickly, or you want to hurry up and get out of a losing position quickly before losing more money. To place this order, make sure that the sell side is selected, which turns the buttons red. You would select market, type in the number of shares you want to sell in the shares box, and then click the sell button. Next up is the limit order, which is used to buy or sell a stock at a specific price. So unlike a market order where the price you buy or sell for isn't really guaranteed, the limit order guarantees the price you specify as long as there's enough shares available to fill your order. So a limit order is used to purchase shares at a price that is lower than the current price. For example, let's say that the stock is currently trading at $10, but you only want to buy it if it drops down to $9.90. This is when you would use a limit buy order set for $9.90. And it will only execute if the price reaches $9.90. If the price never comes down to $9.90, then it will not execute the order. So to place a limit buy order, make sure the buy side is blue, then select limit from the order type options, type in the price you want to purchase the stock for in the price box, type in the number of shares you want to purchase in the shares box, and then click the buy button. Now let's take this scenario and say the price did drop to $9.90 and now you are in a position. And now you want to sell the position at $10. This is when you would use a limit sell order, which is used to sell shares at a higher price than the current price. So if the current price is at $9.90 and you only want to sell at $10, then you would use a limit sell order set for $10, and it will only execute that order if the price reaches $10. So to execute this order, you would make sure that the sell side is selected, which turns the buttons red, choose limit, enter the price you want to sell the shares for in the price box, enter the number of shares you want to sell in the shares box, and then click the sell button. Next up is the stop order type. A stop order becomes a market order once a specific price is reached. So let's say that the current trading price is at $9.90, and you believe if the price can go up to $10, then it will produce a large gain. But you don't want to miss out, so you want to buy using a market order only if the price reaches $10. Well, since you only want to buy at a price that is higher than the current price, you would have to use a stop buy order. To execute this, make sure the buy side is selected, choose the stop order type option, enter the price you want the market order to trigger in the price box, then type in the number of shares you want in the shares box, and then click the buy button. Now let's say that the price did reach up to $10 and it put you into a position, and you want to sell for a profit at $10.10. So just to see if you're paying attention, what type of order would you use for this? Well, since you want to sell at a price that is higher than the current price, then you would use a limit sell order. But what if the price doesn't reach $10.10 and instead goes lower and you wanted to exit the position before you lose a substantial amount of money by selling at $9.80? If this is the case, you would have to use a stop sell order, as it's used to sell shares at a price that is lower than the current price. So to use this order type, select the sell side, click the stop option, type in the price you want the market sell order to trigger in the price box, type in the number of shares you want to sell in the shares box, and then click the sell button. Now, the last order type we are going to talk about is the stop limit order. This combines the features of a stop order and limit order. So let's go back to the scenario where the stock is trading at $9.90 and you only want to buy if the stock reaches $10. Well, if you use a regular stop buy order at $10, you might not get filled at exactly 10 because a regular stop order is a market order, which could put you into a position at a price higher than 10 depending on how fast the price fluctuates. So to have more control over where you get filled at, you can use a stop limit buy order, which is used to purchase shares once it reaches a certain price, but not pay more than a specified price. So this is where you would choose stop limit, enter the price you want the buy order to trigger inside the stop price box, which is $10 from the example. Then inside the limit price box, you would enter the maximum price you want to get filled at. For example, it could be $10, $10.01, or $10.02. Then once you enter the number of shares you want, you would click the buy button. So what this order does is send a buy order once it reaches $10, but fills you no higher than $10.02. Same thing on the sell side, but if you're trying to limit losses. If you bought at $10 and wanted to sell if the price went lower, but wanted to have more control over the price you get filled at, you would choose stop limit, enter the price you want the sell order to trigger inside the stop price box, enter the minimum price you want to get filled at in the limit price box, enter the amount of shares that you want to sell, and then click the sell button. All right, so those are the 4 main order types. I hope y'all learned something, and I'd like to thank you so much for watching.